Hey, you guys, this is Tamiya Robles. I'm your credit repair specialist expert. I am the host of my podcast, Coast to Coast Credit. I am the owner of FixMyCreditNow850.com. I am also the president of NAREB's High Desert chapter in California. And I have today, we're doing our usual Ask a Mortgage Lender with Sean Rogers. And Sean is not just only a mortgage lender. He is also our chapter's second vice president. Welcome, welcome, Sean. Welcome.
Thank you for having me. Pleasure to be here and to disperse this wonderful knowledge to the people. Yes.
Yes. So today I know we've been dropping a lot of gems on y'all, and you guys are asking questions, you're liking and sharing, commenting. Thank you so much. We appreciate it. But today we're going to talk about after a mortgage approval. So once you're approved for a mortgage, then what is next? So I'm going to pass that on to Sean.
All right. So after the approvals, so once you get that golden ticket that says, hey, you're pre-approved or approved for a mortgage, what do you do next? All right. So let's go over that. So the first thing you're going to do, once you're, of course, if you're house shopping, is find the house, right? Got to find the house and go into contract. Here's what happens. So your lender talks to your realtor and says, hey, Tobias is approved for $300,000 to purchase a home using a particular type of financing, and that'll be outlined. They'll say FHA, VA, conventional, USDA, something along those lines, right? So once we figure out how much you're approved for, what kind of loan we're going to take, then we're going to custom tailor your home search with your realtor that'll fit that criteria. Because remember, not every home can be used, or you can use FHA or VA or USDA financing to purchase. Keep that in mind. Okay. Now, once you find the house, we're going to go into contract. So your realtor's going to go and make an offer for you. They're going to say, hey, listen, Maya wants to buy this house for $300,000. We're going to use conventional financing or FHA financing or whatever it might be. Right. And then what we'll do, we're going to say, hey, um, your realtor may ask on your behalf to pay some closing cost, right? So your realtor may say, hey, listen, somebody wants to buy your house for $300,000. However, we want you, Mr. Seller, to give us back seven, eight, nine, $10,000 in closing cost concession. Once again, guys, when you're asking for money back to cover your closing costs from the seller, you may not always get it, and that decision is not up to the realtor, up to your realtor, up to the seller of the home, right? So, and it may be a situation to whereas it's an area that's being a house is being bid on heavily, and somebody else said they'll buy your house for 300 grand, but I don't want any seller concessions, right? The seller will take that offer as opposed to yours, asking for the free money, right? So, if your offer is accepted, the next step is to execute the contract. So then you will sign, seller will sign, make sure the terms are good, and we'll open up escrow, what's called escrow, at the title company. Okay? The title company will hold all parties accountable. They are a neutral ground between the buyers and the sellers. Okay? You'll then go and start what you call your due diligence period. So you'll do your work, your inspections on the house. Okay? You'll do things you want to personally do, like look around the neighborhood, look at the school system, look at the taxes, go in and out the house to make sure that's really what you want to do, right? And then you also at the same time pay your earnest money deposit. Okay. In some parts of the country, the earnest money deposit can be 1%, 2%, or 3% of your purchase price. Sometimes it could be no earnest money deposit. Sometimes it could be $500, right? Don't know. That number can be negotiable or it can be customary based upon where you're buying your home at. Okay. So keep that in mind. All right. Now, after you pay your earnest money deposit and you've done your inspections, you say, you know what? I did my homeowner's inspection. It looks good. I want to move forward. Okay, great. That's when the lender starts getting involved at that point, right? So we're going to open the account on our side. We'll take your loan from a pre-approval to a conditional. Okay. Then at that point, what's going to happen is we'll start ordering your documents. We're going to order a title report for you through the title company. We're going to order your appraisal. Okay. We're going to start getting everything tight. We're going to order your insurances and make sure everything is tight with that. All right. Now, after that takes place, your loan's going to go get disclosed, and you're going to go back into underwriting again for another time. Okay, to make sure they're going to underwrite the property to make sure the property is good to go. So we've already underwritten. If you got a pre-approval, we've already underwritten your income, your credit, and your assets. Right. That should be pretty much clear at that point, or close to being clear. Okay, depending upon when you got your pre-approval and then when you went under contract. Could have been some time passed, and maybe your pay stubs have expired, bank statements have expired, things like that. Right now, um, we appraise the house. Everything goes through with the appraisal. Okay, after the appraisal, and at that point, I should have everything else in, such as your title report, clear title, all of your income docs, assets, or any other conditions the underwriter has asked us for to final approve the loan. All right. Now, once the appraisal comes in, with most lenders, I send out a document called the closing disclosure. Okay. Now, the closing disclosure will have a breakdown of all your fees, all your debits, all your credits on a 3-page piece of paper. Okay. Now, your loan officer is going to walk you through that and explain what every line item is. All right. But it'll break everything down. Now, the first one you get, guys, will not be correct. It's what you call an unbalanced closing disclosure. It's never correct. In most cases, it's never correct. Things may change during the process. Okay. Now, once the CD goes out, you'll sign it. It'll start your 3-day clock. So basically, what that means is that you cannot close for 3 days until after you sign that document. Okay, 3 business days, not calendar days. Saturday does count as a business day in the mortgage world. Okay, now once the 3-day cool down happens, then you can sign your closing documents. Okay, now before you sign the closing documents, you'll be issued a clear to close. So make sure everything's done with the loan. Final approval is what it's called, clear to close, final approval, whatever it may be. Okay, then you'll go down to the closing table. Okay, and you'll sign your final loan package in front of a notary or an attorney, depending upon what state you're in. Okay, and then after that, you are a homeowner. Okay, pretty simple, and it's a lovely, wonderful process. Okay, now, um, what you're going to look out for as far as I would say your things you need to know about your terms of the loan, what you're doing, your payments, all the good stuff. During the process, you're going to get thrown with a lot of mortgage jargon, a lot of mortgage terms, right? Your loan officer may say things like, "Hey, your amortization is this, your rate's this, payments this, or etc." Right? You really want to know what those things are, so you're not thrown for a loop. Now, in most cases, your loan officer should tell you, uh, in layman's terms, what these things mean. But if they don't, this is a small list of things you want to look out for. Now, this is quite rare in the regular mortgage world. The prepayment penalty. Now, back in the day, you would get a 3, 4, 2, 1 year prepay penalty, which says, hey, if you pay this loan off, they're either paying it off with your own money or refinancing or selling the house. You got to pay us an extra 2 or 3 or 4 or 5% of the loan amount, or 6 months of interest at closing. Now, those are pretty much outlawed on any FHA, conventional VA, USDA loans, or anything that's owner occupied. They are still available on what they call non-qualified mortgages, like your DSCR loans or sometimes other investment property loans. You can still get a prepayment penalty on those, which sometimes help lower the interest rate. So what that does is basically telling the lender, look, I'm going to stick with this loan for a longer amount of time, right? Lender will make more money. So basically, you're committing to that loan for an extra 2 or 3 years. Even though you could pay it off if you wanted to, you're going to hold it so the lender makes more money. Thereby, you'll get a lower interest rate. That's how it usually works out. Okay. Now, um, your realtor should also be speaking with you about what homeownership entails. Okay. Now, Tamiya, I'm going to say this. I'm going to say it with chest. Not everybody can own a home. It ain't for everybody. It really ain't. Okay. Just because you have people telling you, hey, buy a house is the best investment, do this, do that, it may not be. You may not want to be a homeowner. right? It may not be what you want to do. Let me tell you this, T. Before I met my wife, I didn't want to be a homeowner. Even though I wrote loans for a living, I didn't want to do it, right? I didn't want to do it. I had absolutely no desire. I wanted to be able to get up and go somewhere else if I wanted to. That was just me. I got married. Yeah, I bought a house, right? But uh, but for a lot of men, I noticed, it takes a partner to a partner to make a home for a lot of men out there. Like we are the simplest creatures, right? We can live in a shipping container or a box with a PlayStation and a couch and a bed. We're good,
So
right? We
true.
don't we don't need much.
Yeah.
But we know when we start a family, those things do change. But anyway, I digress. The point is that your realtor will be talking to you once you close and before you close to prepare you the pitfalls of home ownership, what could happen, repairs on the house, other bills you got to pay, maintenance, right? Deferred maintenance, right? Property taxes, insurance, tax exemptions. A lot goes into it than just you popping that champagne bottle at closing because you bought your first house. A lot that goes into it after the fact, right? And it can wear off real quick for some people. That's why I say it's not for everybody. Okay, but it is for a lot, and it is a good idea still to buy to build generational wealth for your family. So your realtor will do certain things with you after you close. So will your loan officer concerning your mortgage, how to refinance it, what to look out for the following year, how to make your payments. Right, these are very important things you need to know. Now, a good loan officer will tell you that, hey, after closing, I'm still your loan officer. So when things come up, you get phone calls about certain things, certain issues pop up. You can always pick up the phone and call me years after you close. If something comes up that you're not sure about, after they close, right? Pick up the phone when they call you because they're going to have questions, especially for the first time home buyer, because they're going to call mortgage servicing and ask some questions. They may give a bad answer or a raw answer or textbook answer. Never know, right? So a good loan officer will take care of their customers after the fact and let you know that they're still there for you years down the road, uh, if you pick up the phone and call them, right? Um, Now, uh, back to mortgage terms. There's going to be a lot thrown at you. Okay, a lot of terms. And one thing I do like is Google is your friend. You can Google anything and it'll tell you what it is. And I feel that a lot of people just don't seem to do that. If I happen to throw out a term out there they don't understand, they don't ask me. They just Google it or stay confused about it. Right? You can always ask your loan officer any question that may come up that you may have about what he or she is saying. Okay, don't be afraid to step in and say, you know what? Hold on, I didn't understand that response. I didn't understand what you were saying. You break it down for me. No problem. My main concern is when I hang up the phone with you, that you know exactly what's going on and that you're a mini mortgage professional. By the time we're done talking and having our consultation, you should understand what time it is, what we're doing, how we're doing it, when we're doing it, and why we're doing it. Right? I hate to hang up with somebody and they don't understand, or they call the realtor back and say, I didn't understand what Sean was talking about. Could you break it down for me? Or that's the biggest insult to me, that I didn't break it down for you properly, and you're asking somebody else for information. Okay, um, but some of the things you want to look out for, or the main things you want to touch on, are your interest rate, your loan term. Is it a fixed loan? Is it a variable loan? Is it a permanent buy down? Temporary buy down? Escrow account? What's an escrow account? What's my loan amount? What's mortgage insurance? What's my premiums, etc.? What's my monthly payments? Right? Those are things you want to look out for and know before you sign on the dotted line. Let's take a look at those. My term. What term of loan am I doing? That generally refers to how many years you're going to pay this mortgage. All right. 30 year, 25 year, 20, 15, 10 year. Okay. Sometimes we may have to do a shorter term mortgage for it to get you approved. As odd as that sounds, I've had to do 25 and 20-year loans as opposed to a 30-year loan to get someone approved. For some reason, the automated underwriting system, it can see a shorter term as more skin in the game for the borrower, or there's less time that they'll have the note, so therefore they're less of a risk. Oddly enough, okay. Keep in mind, the shorter the term that you have, the more your monthly payment will be. And in most cases, you can mirror that term if you, on your own, pay more than what's required on a monthly basis when you start making your payments. Keep that in mind too. Okay. Now, fixed versus adjustable. Now, I haven't sold an adjustable rate mortgage in about a good 7 or 8 years. It's been a minute. Okay. The appetite for those on the secondary market are slim to none. So, in other words, a 30-year fixed loan can usually give me, in my pricing book, the same price or usually better as opposed to an arm. So once again, I have an arm in so long, it is very pointless these days. Now there are some lenders that are out there that do offer arms outside of conventional standard or conventional FHA, VA, USDA standard loans. Sometimes the non-QM loans may have 3, 5, or 7 year adjustable rate mortgages. Okay, it depends on what you're doing, but in most cases, the majority of the population takes, USDA, conventional FHA, VA financing, and arms for those are extremely expensive and pointless to do. They're priced at a benefit. So if you're getting an arm these days, chances are either A, going through a credit union, or B, you're doing an outside type of loan that's not a standard Big Four kind of loan. Okay, keep that in mind. Let's talk about our habits. Let's dig into that a little bit, Samaya. You know that I look at on a weekly basis, I would say 25, 30 different credit reports or more. Okay. And I see where your money goes. Just start next day. I look at your bank statements. I see where you spend your bread. Right. I can tell you that every day at 8 o'clock, you're going to Circle K or Quick Trip, getting a coffee, donut, a monster, bag of chips, and a pack of Newport shorts in a box.
All right now.
I can see it. Okay, I can't see all that. I'm just saying, right? I'm just saying. And then I look and see it, and I see that end of the month, all the money's gone. Like everything that you brought in, spent. Now, granted, that could be because that's what it costs you to live. Inflation is whooping our ass right now. It is what it is. It's coming down, but still, right? It's still high. Corporate profits are through the roof, right? They're jacking up prices for no reason. I digress. Look, point is that sometimes we can reel in these spending habits, sometimes we can't, right? However, let's look at some of the fixed expenses that we can hopefully change. Number one is our car payments. Keep in mind, I do know that you back in the day, like when I was getting out of college, in 2001, I was getting out of high school, and you can get a nice car for like 10 to 15,000 bucks, nice used car, and pay $200 a month, and you're cool, you're great, right? Or $300 a month, right? And everything was great. Now that money is not today's money. It's a little different, right? You're gonna spend 35 to $40,000 for a brand new car in some cases if you want a brand new car, right out the door, right? And that's gonna cost you, 6, 7, $800 a month for the car payment. I still drive my 2015 Nissan Altima SV,
As you should.
2.4 cylinder CVT transmission. It doesn't go very fast, right? It gets me from point A to point B. The paint is peeling at the top near my sunroof, right? I got a couple of dents in it, right? My wheels are dirty. My tires are old. They still have tread on them, but But the point is, it's paid off and has been for years, right? Now, I'm not out here. I'm 41 years old. I'm not out here trying to impress anyone. I'm trying to get to point A to point B safely, right? And I see 3 to 4 years, and they're buying cars that they put miles on them and they just get tired of them because they want a new car.
Yeah. Yeah.
And it hurts my soul, especially when I see my young brothers out here picking up Scat Packs and Hellcats. They're dropping a stack a month on them, right?
Yeah.
That
Yeah.
$1,000 a month can probably cost you sometimes $100,000 in purchase price or
Crazy.
more, right? And I'll tell you this, if you're the kind of person that has to have that nice car, hey, do you? I'm not gonna clown you for having a nice whip. That's great. Maybe you spend a lot of time driving and you want to drive comfortably. I don't drive that much. I go to the gym, kids to school, Costco, down the street. I'm going a lot of places, right? But if you're commuting and driving all the time, You want to drive in comfort. You want those creature comforts that that new car has to offer. You want that GPS. You want that auto brake system, whatever it may be. You want those things, and then you got to have it. Okay, cool, cool. Be prepared to probably get less purchase price. Ready for that, right? Just because you can afford it doesn't mean you should buy it, right? But if you like it, you love it. If you like it, I love it. That could affect your purchase power, right? Now, one thing I will tell you, if you are thinking about buying a home in the next calendar year, and you're looking at your 2015 Nissan Altima outside, and it's still running, motor's still good, it's still going, the tires are still straight, no cracks in the windshield, you're good. If you look at your car, you can hold out until you buy that house. Please do so. Okay. Now, once you get those house keys and you can afford it, go get that Hellcat. Get that Scat Pack. Go get it. Go get it. Right? Go get it. Go ahead and get it.
You
Right?
said it, Sean. You
Go ahead
said
and
it.
get it.
You said it.
You know what
We're
I'm
gonna
saying?
all hold you to that. Just
Hey,
okay.
go get it.
Okay.
Just buy the house first. Right? As long as you're paying us our money for this mortgage, and then you're going and getting your because a lot of people what I do realize though, a lot of folks have side hustles, Tamiya, and they got other ways of making money that I'm not going to discuss that I can't put on paper, right? And tell them they can afford the extra $1,000 a month, but to me, I can't see that money, so I'm gonna say you can't afford it, right? I'm gonna say that, but maybe they do a little something on the side where that brings them in an extra $2,000, $3,000 a month, and they got this extra cash. They just, you know, okay, go for it, go for it, right? Right? I'm not paying that car note. I'm not paying that house note. I'm not doing it. I'm not doing it. Right? Things. So if you feel you can afford those things after the fact, after you pick up these house keys, then by all means go for it. But live within your means if you can, please. Right? Especially a lot of my young brothers out there. I'm gonna say this. May have to edit this, but you don't need no car to get extra pussy, my guy.
Hey,
You don't need it. You don't
hey,
need
because
it.
that's what it's about, though.
I know. Listen, listen. What did Jay Z say? Power the PUSSY. Listen, listen.
Mhm.
If it weren't for women, we be driving the raggediest cars. We'd be driving the raggediest cars. We wouldn't care. We
Listen,
wouldn't care.
Sean, as a newly single woman, well, I've been single officially now for a year or whatever. Okay,
Hmm.
listen, we don't, we can barely find men that will just take us anywhere in anything from point A to point B. You know what I'm saying? Having a Hellcat or whatever, I could care less. Are you going to pick me up and drop me off? Like, I'll do you one better. My grandmother never knew how to drive until she was 85 years old. And the only reason why she only drove for a year. Everybody brought her a car and she drove, I think, the thing 3 times. And she said, all my life, my husband's always picked me up and dropped me off. So why do I need to learn how to
Oh, you
drive
learn
now?
how to drive. Wow, that's crazy.
So listen, if I could find a man like that, you know what I mean? Hellcat. I don't care if it's a hoopty. Just make sure it's clean. You know what I'm
Right,
saying?
right.
It could be a paid off Nissan. I don't care. I don't
Exactly.
care.
I'm gonna get a lot of hate in the comments for that, but I'm gonna tell you. Hey, listen, 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 listen. End of the day, what's comfortable is knowing that in the event something happens to me, right? I won't see a tow truck in my yard knocking down my Nissan Altima trying to take it.
Yeah,
I'm not gonna see
that's
that,
true.
right? I'm not
Mm-hmm.
gonna have to call the bank or tell the homies or my family and friends I couldn't afford that Hellcat. I had to give it back. It's
Mm-hmm.
not a
And
good
that is a
combination you want to
repo
have.
on your credit report. That is a
Repo.
repo.
That's a rough look. But
Mm-hmm.
I say that to say this to you: they need to live within their means. And if you're thinking about buying a home, within the next year or so, and you can hold out on that car, please do so. Do us all a favor, make your life a little better. Hold out if you can. Now
Mm-hmm.
if it breaks down and side of the road looking crazy, you're shut up money for repairs, and if that starts getting expensive, okay,
Mm-hmm.
it
Mm-hmm.
is what it is, right? But if you can hold
Mm-hmm.
out,
Yeah.
hey, hey, by all means. But once again, let's live within our means if we can afford it. You ain't gotta have the flyest clothes. right? You ain't gotta be rocking, the Louis Vuitton. I mean, I'm wearing a Gucci shirt right now, but that's not the point. I can afford it.
Mhm.
The point is that we don't have to have these things to impress others, right? When our own household is in poor shape, let's not do that, right? But if you got it, right, it ain't tricking if you got it. You know
That's
what I'm saying?
right.
It ain't tricking if you got it.
That's
But
right.
just but I do say that I will say this is that some of the bars that I've dealt with that you know uh, either don't have a car or have a paid off car, credit profiles are clean. I can tell, right?
Mm,
The profiles are pretty much non-existent. There's no um, credit cards or different kind of installment loans there,
mhm,
um, and they have a little bit of savings, not much, right? But for example, I did a loan a couple of weeks ago for a young man worked at a grocery store, and he made about $20 an hour, and he only had a credit card,
mhm,
and we maxed out his debt ratio to buy him a house, but he did it. Got him down payment assistance and everything, the whole shebang. He
mhm,
brought nothing to closing. Seller paid the closing cost. He was able to buy a house in a
mhm,
certain part of the country, making $20 an hour, all because he didn't have any other debt besides a little credit card that he paid off the month before he
mhm,
called me. Yeah, just living within your means will pay off. But once again, I'm gonna say this for the 15th time. If you're thinking about buying a house in the next 12 months, do what you can to lighten your debt load prior
mhm.
to trying to buy a home. It'll make your purchase power so much more, and you can probably get what you really want because your debt load is non-existent.
Excellent. Thank you. Sean, this was a goodie for real. Now I only have two questions for you that were sent over. So let me it says, once you're approved, can the mortgage company actually pull the mortgage? What did it say? Can they literally pull the mortgage if they, for whatever reason, or if you're missing a payment, maybe you missed your very first payment, or and do they still check your credit like for 90 days? These are kind of like myths, urban myths that I've heard people say, but that was a question that came in. Can the mortgage company pull your mortgage after you've already been approved, lived in the house, so on and so forth, up to, I think, was it 90 days?
Yes, they
Ah,
can.
uh-oh.
Now, this is a very rare situation. I've seen this once or twice in my career. Okay, but granted, I don't work on the servicing side, so I don't see everything. Right,
Mm-hmm.
servicing and origination is two different, you know, situations there.
Mm-hmm.
Right, I've seen one where this was an occupancy issue. Let me give you the story here.
Mm-hmm.
So a guy purchased a house, and he told the loan officer and everybody else that he's going to live in the home. Okay, and he, in his defense, had all intentions of living in the home. Right, he was buying a house, bigger house for his kids and his wife, live in the house. Nothing simple, right? I mean, nothing fancy, right? Uh, now, a month after he closed, he got a call from his job. They had to immediately transfer him across the country. Okay, now he packs up his family, leaves the house, got a tenant to occupy the property. He goes and gets utilities in a rental house across the country. We're talking coast to coast, cross country. Right? So like from California to New York, right? The mortgage company finds out that uh, utilities are no longer in his name in the house that they departed, right? They call the borrower and say, hey, we notice utilities aren't in your name. They're in some guy named John Smith's name. I'm making up a fictitious person, right? And he was like, yeah, I had to move across the country because my job transferred me all of a sudden. I had no idea what's going on. The company called BS, or the mortgage company called BS, and initiated foreclosure proceedings on him.
Oh my gosh.
Now they gave it. They get now in this situation. They give you a choice. They don't just say, "Hey, get out tomorrow."
Mm-hmm.
Here's what you can do. They say, "Hey, listen, we've got to adjust this mortgage to an investment property. So let's say you bought a half HA home, or I'm sorry, used FHA financing to buy your home.
Mm-hmm.
They made him put 15% down,
Mm.
flip the loan to an investment, change the interest rate, and they didn't foreclose on him.
Oh man.
Now, he had the money to do so. Okay.
Mm-hmm. Mm-hmm.
Basically, his company went and paid for it. That's what happened.
Mm-hmm. Mm-hmm. Okay.
Now, let's say you didn't have that bread, they're going to foreclose.
What about the tenant though? If you do have a tenant in there, like are they gonna get evicted? I guess eviction for the tenant and a foreclosure for the owner.
Well, it wouldn't be an eviction for the tenant. There'll be no eviction paperwork filed on him. But the bank would foreclose first. So
Mm-hmm.
the bank would take ownership of the property again, which once again wouldn't be overnight. It would take a few months to get that done, right? Um, then the bank, once the bank owns the property, then they would evict the borrower, evict that tenant. It wouldn't go as an actual eviction. They would try to get him out if possible. I
Mm-hmm.
don't think they would honor the lease agreement
Mm-hmm.
that was set
Mm-hmm.
in place by the previous owner.
Mm-hmm.
They'll get rid of it. That in itself could get sticky because it can get caught up in court, and it
Mm-hmm.
may end up costing the bank more money to try to evict this person. They may
Jeez.
say, you know what, leave him in there.
Okay.
That may
Okay.
happen, and
Well,
sell the
thank you.
house at auction, and then the new owner would then pick up the lease after that.
Okay. Okay. All right. And then the final question was someone wants to know after they're approved for a mortgage, can they really purchase a home within 30 days that fast?
Yeah, sure
Okay.
can, sure can.
Okay.
The biggest issue is finding the house.
Hmm.
That's the biggest issue that I see is finding the home that you want,
Hmm.
right? Or getting your offer accepted for the house that you want to buy. That's the biggest issue. So yeah, so I can get you approved on Monday. You can be under contract by Tuesday and close
Uh,
by the end of the month.
wow.
Totally possible. Yeah.
Jeez. Okay. You guys need to go ahead and get a house. Just go ahead. Go ahead and get a house, y'all. All right.
Right.
Well, that was a lot. Hopefully that gave everybody something to think about, a lot of encouragement as well. Hopefully you know how to move moving forward when it comes to getting home. So we're gonna wrap this up. Again, be sure to like, comment, share, subscribe. We are on social media. You can definitely check out our handles in the corner here. Facebook, Credit and First Time Homebuyers Plug. Both Sean and I are admins of that page. You can follow us there. Check us out there. Just be sure to like, comment, share, subscribe, all that good stuff. If you need a lender, reach out to Sean. Okay, his information is in the description. Be sure if you're serious or you need a plan or you're about to use them or whatever, hit him up, schedule a consultation, and he got you from there. If you need your credit repaired, when after you hit Sean up, he will let you know right then and there. Keep in mind, people, you do not need a perfect credit report to get a home. Okay. I know everybody wants to be in the 800 club. You don't have to be. Okay. Jesus. Because that may take a long time for some of y'all. But
Right.
anyway, if you're trying to get in the crib quickly, just talk to Sean. Sean will tell me if anything needs to be fixed at all, what needs to be done so it could expedite the process. But in the meantime, I'm gonna let you guys go. I'll let Sean take us out. I wish you the best of luck on your credit journey. Sean, you can take it from here.
Thank you, T. Yes, guys, please, if you're thinking about buying a home in the next 6 months, 12 months, the easiest thing you can do is pick up the phone and call me. Okay. It takes me about 15 minutes of your life to see what I can do for you. Not much time at all. Right? Set a turn on Netflix for a quick episode. Call you, boy. Call me up. We'll go through the numbers, the data, see where you're at, give you a game plan, right? Give you some motivation, right? I may tell you don't feel good about yourself once you talk to me, right? That's just how it is. So yeah, look out for our next episodes. More coming soon. Links in the bio. Just give us a call. If you got any questions or concerns, we'll be here for you guys.